Hey, what's up guys? CryptoFee here for you today and welcome back to another day in the crypto space and with the Bitcoin price. Today I want to talk about something that nobody seems to be aware of or paying attention to. This is not financial advice, of course, it's just my opinion from my perspective as a crypto trader. So, subscribe to my channel, smash up the like button and let's get started. I want to start talking about the weekly chart because there's something I need to tell you. Another disclaimer is that I am not a perma bull or a perma bear. I'm just a trader that have his own strategies based on what he sees on the chart. So what I'm seeing right now, I want to start placing the Fibonacci retracement from the very top to the very bottom. Because as you can see, we are still under the 50% Fibonacci retracement. We perfectly touched the 38.20% and we got rejected. So why am I showing you this? Because I want to place a trend line from when we start the bull run until right now. Okay, so let's say that this is our trend line. Now I want to go into the daily chart and I want to place another trend line. As you can see, we are still in an uptrend as we are making higher lows. But what scares me, okay, and I don't want to scare you, okay, is that this to me seems like a rising wedge. So what is a rising wedge? A rising wedge is a bearish pattern if we are under the 50% Fibonacci retracement, and we are actually below the 50%. So what is going to happen right now? As you can see, the 50% Fibonacci retracement is around 5,900 to 51k, which perfectly fit our trend line that we broke at the beginning of this year, and now we are probably going to retest it as a resistance. So what can we expect right now? We can expect to bounce back, going to touch this 51k, and then we will have to see if we will have the power to break this trend line and also the 50% Fibonacci retracement, or if we'll come back down and break this trend line, going into a real bear market. Because as I told you, the rising wedge is a bearish pattern if we are under the 50% Fibonacci retracement. So if we go into the monthly chart, I don't want to see a monthly close like that. I don't want to engulf the previous month because otherwise I think the bear market will come, okay, because we are actually making a higher low. So here, it's too early to say because we have 15 days left before closing the monthly candle. But if we're going to close like this, there's a possibility to break actually this rising wedge and then break even this level and start to be in a bear market. And I don't want to scare you, I just want to warn you. Because we can even bounce back, break the 50% Fibonacci retracement, break this trend line and go up and recover this bull market. But as a trader, I want you to be prepared for both the scenarios. I know that you probably want to talk about more altcoins, but you have to keep in mind that Bitcoin is the king of the market. So all the market will follow Bitcoin. So that's why it's very important to always keep an eye on Bitcoin. So, if we're going to be in a bear market, I believe that 30k is a resistance that we don't have to break. Why? Because if we are gonna break the 29k, we will probably go much lower, because another support is around here, from 19 to 17k. So, that's another level of support. I don't want to scare you guys, I believe in Bitcoin, I will always be bullish on Bitcoin because it's revolutionary, it's an idea, I love Bitcoin. But I'm talking about what I can see in the chart, okay? As you can see, from the previous bull run in 2017, when we entered in the bear market, from the very top to the very bottom, we lost something like 70%, okay? And the same is from the 2013, and actually I think it was much higher, it was 86%. Let me see if we are going from the very top to the very bottom, it could be 75%, 75 to 70%. So this is where I think we'll go if the bear market comes. But with all the bullish news and with all things that are starting to be in place, I believe that we probably won't break the 30k level. But as a trader, I need to be prepared for both the scenarios, both the bullish ones or the bearish ones. So let's see how the price will react in the next couple of weeks, and let's see how the monthly closure will be. So what is my bullish scenario? Is to be able to break again the 50 and the 200 EMA and continue to make higher highs, breaking the previous higher high. Okay, so in this case, for example here, and be able to break finally this trend line and then start to go bullish again. We can even continue to follow this pattern for a while until we have the power to break this resistance right here. And if we go to the monthly chart, I want to show you something. I don't know if you have heard about the Elliott Wave, but basically is a theory about the technical analysis which says that the market has made from waves, and usually these waves are 5. So if you pretend to draw an Elliott Wave in the monthly chart starting from the bull run, we can have one wave, second wave, third wave that broke the previous high, third wave. So now we could expect to bounce back, having the power to make the fifth wave that can be higher than the previous one. Or we can even break the trend line here, and make like a triple top and then start the correction. Okay, this would be a bearish pattern, and then going lower, start the bear market again. But you have to remember that we won't see a bear market until we break this previous low here. Let me put a line here. So this is a level that we must not break if you don't want to start a bear market again. Another thing that I noticed in the monthly chart, but you can see also in the weekly chart, is that the volumes are decreasing. Okay, so this is not a great sign. But I'm expecting another wave, bullish ones, before going lower. But we will have to see how the price reacts in the specific zone that I told you about before. So for instance, the support zone, and most important, this trend line that is aligned also to a 50% Fibonacci retracement. And that's pretty much it. Thank you very much, guys. Please subscribe to my channel, follow me on Twitter, smash up the like button, and stay tuned because other videos are coming. Thank you.